Welcome to the Mines and Money Online Connect Global Virtual Mining Conference. I'm Niels Christensen. I'm editor with KITCO News, and I'm having a chat today with Sean Rosen, CEO of Osisko Gold Royalties. Sean, we've talked many times. It's really nice to catch up on this forum.
Yeah, thanks. It is a good forum, Niels, and I'm glad to be here this morning. It's exciting times in the gold space.
Yeah, we only have 20 minutes, but there's so much to talk about. I just wanted to say for everybody watching, we do get questions from the audience. So if you have a question you'd like to ask Sean, type it in the chat portion of the program, and we'll try to answer your questions as they come through. But Sean, just to kick things off, we've seen money come back into the mining sector, and this is a question I've asked some streamers. You've been the lifeblood of the mining sector for many years. There's struggled to get capital into this sector, and you've played a key role. So with money coming back in, what role does a streamer royalty company have?
Well, first off, we'd like to say welcome back to the generalists. Good to see you. We kind of missed you. I think in terms of access to capital, I mean, the royalty and streaming business has evolved throughout the years. Before, it was a sort of a down market source of capital for retirement of debt and initiation of project finance. We were more in a traditional role of project financing at this point. And 10 years ago, streaming and royalties were fairly limited to what they were doing. Now they're pretty much part of every financing that we look at, and people have learned how to calculate their cost of capital, whether it's debt, whether it's equity, or whether it's royalty and stream. So it's become much more mainstream and much more socially acceptable as part of the project financing. We are seeing quite a few entrants into the space. We seem to have a new royalty company every month. So there is competition in the space. So I think that's good for the for the Investcos, the developers and producers, because people are competing to have those opportunities. And our opportunity is within Osisko, we compete. About 75% of our asset allocation goes into traditional royalties and streams. The other 25% goes into our accelerator business, which is more of an incubation, early concept project, and we're trying to incubate one or two companies a year and take a royalty at the beginning of that. So we're still pretty much where we were 2014 business plan, that we knew we had to compete in this space. So we think there's a role for us to continue to take earlier stage stuff in a portion of our portfolio and try and make those things along. So as the other space has tightened up, and there seems to be a lot of very sort of pure play royalty companies that are thrashing it out, to do that. We've stayed pretty much in our lane and created value the other way, and we continue to see a lot of opportunity in the accelerator space.
I was going to say, I mean, you do have a huge pipeline. Your portfolio is over 130 streaming deals.
Yeah.
And so the question is, where do you go from here? Where do you see potential in this space? I like what you're saying about sort of the early the incubator stuff, part of the projects. But I guess where for you guys, where is the growth potential?
Well, we've already baked in a lot of our growth. So the big growth opportunity for us is things that are transitioning from the accelerator model into the development model and traditional project financing. Things like Windfall Lake, where we've seen the project evolve, Falco Resources, where they were in the accelerator category. Now they're moving more into the 75% category. We did deals like the one with Victoria, which was probably the last pure play royalty deal, 5% top line royalty on Canada's newest gold producer. So we say our role is sort of that organic stuff that we created in the accelerator business, evolving into the mainstream part of our business. And we have, the ability to more than double our current GEOs just within the organic pipeline. So even if we didn't do another deal tomorrow, we're still, set to be the highest growth profile pretty much in the sector over the next 5 years.
Oh, wow. You guys have a big footprint in northern Quebec. I mean, you know, Malartic, Windfall, which they just drilled the deepest hole in Canada
Yes.
last year. Really exciting stuff that's going on there. What other, and obviously, you know, Victoria up in the Yukon. What other jurisdictions do you have? Do you like that you're looking at?
Well, obviously, you know, our footprint in Quebec also covers Eleanor, covers some of the
Yeah.
ground in the Abitibi. We have Falco
And Malartic,
Resources.
you do have a streaming on Malartic as
We have a 5% top line royalty.
Sorry, Lamarck.
Lamac, yeah.
Lamac, yeah.
So we have Lamac with El Dorado. And the most exciting thing in Quebec right now, it's, you know, obviously Windfall Lake is leading the charge, but the second one is, you know, the underground at Malartic is spectacular. Agnico and Yamana have done a great job to discover that. And it looks like they've added, you know, plus 7 million ounces to the underground there. So, you know, that royalty that we have there is still our cornerstone asset. And I think that mine and, you know, the Abitibi camp continues to deliver. You know, the Cadillac break is the main structure in Quebec, and it just continues to produce gold. And obviously with technology changes and commodity changes, it just keeps getting better and better. So we're very intent on keeping our brownfield. You know, we look at the properties a lot like you look at real estate. You know, there's downtown core assets and then there's waterfront. Both are fairly finite. So we've been brownfield specialists all along. And, you know, John Brzezinski and the team up at Windfall have really had a spectacular, you know, sort of brownfield discovery. It was an old one. We bought that company for $35 million in 2016. Been drilling there, 20 rigs turning, adding ounces every day. And it's now, you know, a $1.4 billion company with probably the highest grade discovery in Canada in a long time. And we continue to see growth in that pattern. That's a 2,000 square kilometer land package. So we look at things a lot about how much exposure do we have to the right chemistry set and the right structures. The other jurisdiction that we like a lot is obviously British Columbia, where we have Barkerville. Barkerville is another spectacular story. It sits within Osisko Gold Royalties right now in a company called North Spirit. So it's not public at this point in time. But when we did take it private, we were almost at 5 million ounces, and we continue to drill there. There's about 10 drills turning on it. Will be about 10 drills turning on it by the end of the season. But there's an 83 kilometer long mineralized trend there that we have a top line royalty on, and we'll be looking to partner on that project as we get further into it. But it's been quite a spectacular evolution with significant amount of discoveries. So BC is the top jurisdiction for us. Quebec, BC, Ontario, and then the Yukon, obviously with Victoria. That's our main footprint. We have a 5% royalty on that mine, and they've declared commercial production. And they're, you know, the design is to get to 220,000 ounces a year. So there's not that many projects out there right now that are going north of 200,000 ounces a year. So we've got a footprint on a lot of them. Falco Resources is 9.1 million ounces overall gold equivalent. With 6.1 million ounces of reserves. We have a silver deal on there. So, you know, silver prices have been ripping here. So we're quite happy with that. So that's another big one, but it's a big project. So it's a big VMS system like LaRonde. It sits under in Rouyn-Noranda. It's already produced 11 million ounces from the top 600 meters. So there's another 2 kilometers underneath that to go. So these are big deposits that we already have a royalty on or a stream on. So like I said, we baked in a lot of growth. And as these companies transition out of the accelerator side of the business into the mainstream, we pretty much baked in our opportunity set.
Okay, so the question from the audience, and I think that ties in really nicely. Do you see any potential outside of Canada? Is there any jurisdictions you like there?
Yeah, we've got a portfolio of projects. We're invested in a few things in Peru and in Chile. We've got a silver stream in Chile. We have a portfolio of projects that are, you know, smaller things that are outside of it. But when we bought the portfolio from Orion in 2017, we added about 70 royalties, of which about 40 of them are outside of North America. But we have 108 royalties within North America, and we consider premium jurisdictions Peru and Chile. And then so we continue to monitor those situations, and we're continuing to develop that. we'll never say no to a jurisdiction. It comes down to who the operator is once we're outside of Canada. So if it's a premium operator, there's no problem for us. We'll be there. We try to avoid getting into too many crazy jurisdictions, but we've dominantly focused on brownfield in Canada, where we've had our success, and we've been able to build the fourth largest royalty company in the space in 5 years, basically, here in Canada, in a space in 2014 when everybody said, well, what are you guys going to do? And we had one producing royalty and 4 non-producing royalties. We're at 130 now, and we're at about 80,000 GEOs, with a little bit of damage from the COVID shutdowns in some of the mines this year. But with a growth idea setting at to 140, 150 with just 1,000 ounces a year, just with what's on our plate now, if we didn't do another deal. However, we are very active, and we are seeing a lot of opportunity, especially in the early stage stuff. I mean, the competition for mature projects is extreme, but that's the way it should be. I mean, when we have an uptick like this, we expect sources of capital like equity to come in and be competitive. I mean, a year ago, equity wasn't really participating, so it's good to see it back. And we need the money to go into the mine. The royalties aren't worth anything unless the mine's in production. So we're always cognizant of that.
Well, okay, and let's switch gears a little bit here. Time is ticking down. I'd love to get your thoughts on the gold price. Gold were $2,000 an ounce earlier this month, hit all-time highs. Does this trend continue, to think? I mean, has gold's best, or has gold had its best days for the year, or is more to come?
Well, I think the same ideas that got us from $1,300 an ounce to $2,000 an ounce in the last 6 months are still the correct ideas. The world is printing money at a famishing rate, with over $4 trillion coming out. I mean, if you could dilute by that much, I mean, if you're a junior mining company and you diluted by 4 times your market cap, obviously your share price would go down. So I think the currencies are under pressure. The governments are running out of ways to do this. We don't know how much more propping up they can do and how much more COVID-19 support that they can handle. So I think investors, we've got a stock market that's pretty much at an all-time high. If you want to go back down market, you want to take some money off the table. You want to sit in cash, which is probably getting diluted, or do you want to try and maybe go to take some protection in gold, which I think is what we're seeing. Is people are becoming cognizant that the main stock market's pretty red hot, considering what the condition of the economy in the world is, and the chances for some significant problems. With the constraints on COVID-19, we're seeing political stress starting to go up. We're seeing the political rhetoric starting to go up. Protectionism's coming back in. Globalization is slowing down. So I think this is pretty much a perfect gold market. If you're going to own gold, this is probably the time to do it.
What about silver? I mean, obviously, we've finally seen silver. That we were losing faith, at the start of the year last year. There's so much. Everybody has such high expectations of silver. We're finally seeing those met. It's finally overtaking gold. We've seen the gold silver rally. It's fallen to its lowest levels now since 2017. So I mean, what do you think silver hits all-time highs?
Well, it's certainly, it's had to play catch up with the traditional gold ratio. Traditionally we're at 75, 80 to 1. So we were lagging quite a bit. We've caught up quite a bit now. Whether it goes past gold on those traditional ratios or not, I'm not so sure. But I mean, as long as gold is rallying, I think that the safe haven aspect, and you see what's going on around the world in terms of social issues, especially in the U.S. and continental Europe. I think that all forms of money that are not backed by government debt are under reconsideration, and it's in these overheated markets. I mean, gold is got a finite capacity in terms of how much investment can go into it. So, silver was a lagging, so people went down market to pick that up. And I think that, that ratio, it could sway back and forth quite a bit, but the real thing is how much capacity is there in the gold space and the silver space to soak up the demand that people have for a safe currency.
So we started this conversation. You welcomed generalists back into the market. Over the, I think it started. Warren Buffett made headlines a couple weeks ago, taking a stake in Barrick. This weekend or last week, we heard an Ohio pension fund, the Ohio Police and Fire Pension Fund, taking a 5% allocation into gold. Do you think we see more generalists come into the market?
I think we have to. I mean, if you're not at 5% or somewhere around that in terms of allocations right now, you're kind of not with the herd. And I think that, in terms of generalists, you don't want to be too far off the fairway compared to your peer group. So it's kind of like, once some of the bigger funds get on the fairway and the precious metal basis, everybody kind of has to come with them because you don't want to be an outlier. I think the other thing that's happening, obviously there's an ESG movement here. So the ESG component has been a bit of a challenge on the resource space, and people have stepped out of their traditional bets on things like coal and others, and precious metals tend to have a better ESG profile. So you have that allocation that's been taken out of, perhaps coal and oil and gas, and it has to go someplace, and they want to be in the resource space because, the good news about the resource space is you actually know which country you're investing in. Whereas if you invest in IT, it moves around on you a bit. And these companies, the IT companies, tech companies are so overvalued right now on a traditional basis. I mean, if you look at any of their ratios, they don't make any sense, right? In terms of cash flow, we've made more money every year for the last 5 years than Tesla did, but.
How are you not bigger than Apple then? That's no.
Exactly. Well, we didn't make more money than them because they're actually profitable. But so there is a thing. I think some of these investments are they're hitting all-time highs day after day, and how much more can you take before you take some money off the table and go look for something else that's a little bit less overbooked.
Well, and it's hard to be like, when a safe haven, bonds are yielding -1% in real terms. It's really hard to get excited about that as a safe haven asset. Like there's so few options out there now.
Well, and that's what I say to generalists. I mean, we pay one of the highest dividends in the gold space at 1.4%, 1.8% some days. Somewhere in that range. So if you're going to own a gold stock, you want to have something you want to get paid at the same time you're doing it. The royalty companies do pay a dividend, but some of the share prices are and the PNAVs ratios are much higher than ours. So that's been our pitch, is that you get exposure to North American gold, a lot of Canadian assets, some big assets, and you get a dividend on the way through, the largest dividend in the royalty space, and larger than almost all the other mining companies as well. So. That's the way that we look at it, is that, we've tried to create our product, from an investment profile that we would be a go-to based on those negative yields and based on the fact that you want to get gold exposure and that you're trying to stay geopolitically safe. And we believe Canada's, probably one of the best countries in the world right now in terms of being able to manage its situation.
Sean, this has been a fantastic conversation. We've run out of time, but I just, I wanted to thank you very much for talking with me today, and thank Mines and Money for putting us together. So thank you very much.
Yeah, a big tip of the hat to Mines and Money for getting this show on the road. And thank you, Niels, for the discussion today. And give us a call at Osisko if there's any other further questions to follow up on. But I will say this, stay calm and buy gold.
Excellent.